Hello guys, so this is Feb 10th today and we are going to analyze the trades from today. Firstly, there are two trades to analyze. I had opened yesterday a 38,400 call option and I had bought that call option and I held on to that call option because the closing was pretty good, pretty high. So we closed near the higher level. So I thought let's hold this option, and the profits on that option is this. And then in the morning today I entered in another call option buy of 38,500 call option. Both the options were for next expiry because I was the buyer and today's the expiry, so there might have been a decay and I don't want to do that to my options. So I thought of taking the next week expiry options. Yes, I got it on the higher side because those were expensive options, but I didn't want that premium decay to happen. That was really important. So this was the reason why I took next week expiry options. And then I held on to both these trades into the RBI policy, and the governor was accommodative in his stance, and because of that this second option also performed pretty well, and the target was around 39,000 on both these options, and we kind of went up above that as well, but I booked my positions near 39,000 because I needed to get what I wanted, and that's all I got from the market. I rode the trend from 38,500 to 39,000, and basically what my reasoning for this trade was that there were some good levels which were breaking, which I'm going to show you in my analysis. So let's go and let's look at the analysis and see how this trade panned out. Hello guys, welcome. So today's analysis of the trade which we took and we booked. So firstly, we are going to talk about the contract which we just discussed, the buy trade of 38,400 CE, which I had opened yesterday. So CE, the call option. So what I was looking at yesterday, that there was a gap up opening yesterday. So around a 200-point gap up opening was there. So this gap which was created, I was looking to enter around that gap, but we didn't dip towards that gap. The lowest we went up after opening was around 38 to 80 levels. So we didn't go till there, but then the whole day we were kind of forming this symmetrical triangle which I have drawn. So we were following this symmetrical triangle. So I was looking for a breakout out of this. This was a no trade zone. Inside this triangle, I wasn't gonna take any trade. So I was holding on to the symmetrical triangle, looking at it the whole day, but this was a no trade zone for me. But around these levels, we broke out with conviction, and then I opened up the position of buying the 38,400 CE, and then the closing was around the highest point of the day. So I thought that the market is strong and let's take the trade till tomorrow and let's hold it. I was getting a profit of around 1,500, 2,000 yesterday, but then I thought let's hold it till tomorrow, and my stop loss was below 38,500 because we had given a good breakout out of this triangle and we were looking bullish. So I thought let's keep a stop loss below 38,500, and there were a lot of 38,500 call writers who were getting trapped. They were short, so they were getting trapped. So I thought let's hold on to this for tomorrow. And then now let's talk about the 38,500 call option which we had bought of the 17th Feb expiry. So what was really happening here in the morning was that if I remove this trend line, so the whole day in the morning we were following this area, this trend line, and this area of around this level. So we were constantly coming and taking support of this trend line. So I thought that let's hold and let's see what happens. So let me draw this trend line a bit more properly. So the whole morning we were following this trend line, and then around 38,500 dip, the first dip which we got, I posted on my Telegram that we need to get in on the market the closest we can towards 38,500. So I entered around 38,580 in the 38,500 call option. So I entered, but then my stop loss was below 38,500 only, as it was in the yesterday's trade which I had opened. So both 38,500 below stop loss was there, and because of the volatility we broke this trend line because of the volatility before the RBI policy, but then we went up back again in the next 15 minutes. So I thought that this was not a genuine breakdown, and I kept on holding to my position. And then at 39,000 was the level which I was saying that it could be a resistance around that level. And as expectation, 2 days back I told you 38,500 to 38,800 could be the expiry, and we are above that level. And if we zoom out and look at the entry which we took around 37,300, we are approximately 1,700 1,800 points on the upside right now. So would have been a great long position, but I have been buying on dips since then. So this was about the 38,500 and 38,400 call option which I had taken of 17th Feb expiry. I have booked both the positions because my target was 39,000, and we are trading above 39,000, but I am happy with whatever I got. My targets got hit and I have exited, and I will sit on the sidelines and observe the market from here. So 39,000, there were a lot of call writers which are exiting their positions as of now. So 39,000 call writers are exiting their positions. So this looks like a strong thing for the market. But yes, 39,000 psychological round level and today's expiry. So that is why I have booked my long positions. So that's about it. And let me know how you think about this trade. Do subscribe to the channel and do like the video. Thank you so much. Bye bye. Take care.